Hmm. Okay, let's see what is wrong with my audio. Sound test. Sound test. Okay, sound test. Sound test. We will start with the live session in less than 30 seconds. Okay, hello everyone. I am Kavita Agrawal. We will start with the session now, but before that, I would like you to give me a confirmation that you're able to see the video and the screen very clearly, and you can hear me clearly, more importantly. So, if someone can just quickly give me a confirmation of that, we can start with the session right away. Okay, let's see. All right. Waiting for confirmation. Is my voice audible to everybody? All right, let's see. Okay, so we are live and we will now begin with our session. Okay, so today we are talking about analysis based trading, and I will also share some examples with you of stocks where I have made entries based on analysis, stocks which I have also recommended to our members based on. In the stock market, the retail traders especially consider buying and selling of stocks as the roadmap to making profits, but that is not so. The roadmap to making profit actually goes through managing your positions actively. What do I mean by that? So, say you found a good stock from some source, you know for a fact, or you have reliable information from a reliable source that some particular stock in the foreseeable future is expected to go up. You go and purchase that stock. But then after you have created the position, there are three things which can happen. Either the stock moves up, either the stock goes sideways, or the stock falls. In all these three situations, you should know what you want to do. Usually sideways movement in the stock is not something that we really need to act on, because there we need to be patient. And also, let me put into context that I am only and only talking about the cash segments. I am not talking about futures or derivatives positions, because that's a whole different ball game. Okay, we are talking about only and only cash segment trading for long term or medium term, not short term, not intraday, only more than 2 days of holding, taking delivery and then going ahead with trading that to make money. Now, so you purchase the stock, you have some reliable information. Now, when you enter the stock, you need two things before you make the entry. The two things are, first, where will you exit if the stock rallies? That is, if the stock goes up. Two, where will you exit if the stock falls? That is, it declines in prices. This converts to basically knowing the target and the stop loss. So when you start analyzing or taking help from an expert to analyze positions for you and start making trades with this foreknowledge of what your target and stop loss would come, the next understanding you arrive at what is called risk reward ratio. Now this risk of your target percentage, your expected target percentage divided by the stop loss percentage. Why is this important? When you understand risk reward ratio, you will understand that for every unit of risk or every percentage of risk, what is the minimum reward that you should demand from every single position. There is a lot of math behind this, very simple math, but the risk reward ratio that you determine as your minimum threshold to participate in any opportunity, it determines your chances of ruin. What do I mean by that? Okay, so in the stock market, because the risk is inherent in participation, success does where the risk reward ratio is such that you can play with it comfortably while also getting good night's sleep. So this is actually the secret to succeeding in the market consistently. Participate in the idea, and so you found 5 of these ideas, okay, and you have participated in them. The next step is to manage your position. What will you do if the position runs up and breaches a resistance level? What will you do if the stock falls and breaches the support level? What will you do if the stock falls a little bit but then bounces back up and continues to rally, right? So the first thing first, when the stock begins to rally, you need to know what level, like beyond what level will you start revising your stop loss. Because remember, in stock market, you also need to give your stock some breathing space, okay? So when the stock starts moving up, after how much upside move are you going to revise your stop loss to make sure that you don't lose your unrealized profits in the event of a market turnaround? At the same time, you also manage to capture at least some profits if the position goes against you, okay? All right. Now if the stock starts to fall, if it bounces back up from the support, very good, your position is safe. But you need to determine a stop loss, and you need to determine the stop loss based on the support level. Usually it is best to have the support level or the stop loss level right below the support level, because the support level usually plays a very important role in allowing the price to bounce back. So if you're going to put your stop loss on the support, you will see many a times your stop loss get triggers and the price turns back very swiftly, leaving you wanting more profits. Okay, so now give me a moment as I set my screen to share with you. Okay. So now what you're seeing on the screen is the active call database, and the purpose of this active calls database is very simple. It basically helps the members of EXP-Invest who receive stock ideas, as I am a SEBI registered analyst. So it helps them manage their position. And how do we do that? We basically mention name of the stocks, the spot price, the stop loss, the target, everything for the members, with regular updates on the dates after the stock has been posted, with remarks and stop loss updates. Okay, so now we will look at some of the ideas which have performed very well. So all the stock ideas which have been closed out so far, from what I can see, they have delivered around 205% of returns since June of last year. Now that's a cumulative number, not an average, so it doesn't make a lot of sense. But I would like to filter here some of the, let's take these 3 stocks. Okay, and let's see why did we go forward with participating in the stock ideas, and how did we pick up these stock ideas, how did we manage them. So the first stock idea is Nelco, on 5th of May, initiated at 620 rupees. Okay, so I'm going to now pull out the chart of Nelco, and we will go back to 5th of May, and we will see why did we start that position and why did we exit it. Okay, so this is the 75-minute time frame, and you can see the chart of Nelco. So this is where I initiated the position. Stock had already declined very significantly, taken support at this blue line which you're seeing. Now this blue line, this faded blue line, is the 200 moving average of the weekly time frame. So the stock basically took support on this, gave one bounce back, came back down. Now this low was very important, because at this low what we saw was that the price went down but did not many declines. Okay, now because of this new theme witnessed, we needed another confirmation. Another confirmation was that the stock had to breach above this level. Now, as you can see, the stock did breach above this level, but it moved very fast, making it difficult for us to create our position. Okay, so this is the spot basically where this confirmation came. So the correct entry point for this was, when the stock had peaked out, and on the 15-minute time frame, I basically waited for the stock to approach again the level of 45. So this is where the stock idea was given. If you are able to see this pin basically indicates that a stock position was initiated over here for the members. So this is where the stock idea was given. So now where would my stop loss be? The stop loss, like I told you, should always be placed below the nearest support, not at the support, below the nearest support. All right. Okay, so so here, like as you can see, this white line is where the support was. So the stop loss that was maintained was slightly below this peak point, which was 569. So below that, the stop loss was initially maintained somewhere here, 555. Okay, as you can see, the price after entry, the price came back down to retest the support level without breaching it, and then bounced up. Now when the stock bounced up, and now the management of the position was created, the price has started moving in the desired direction. Now we come to the stage of managing the position. So how do we do that? Okay, okay. So how do we do that? How do we manage the position? We created the position, the stock price started moving, we set our stop loss, the initial stop loss, that is the stop loss that we set at the time of Okay, so when we initiated the position here, we set up a target. And what was our target? Our target was basically right here at 701. Why? The 701 level was basically chosen because of this peak here. You can see this peak 717. So this green bar that I have drawn now, obviously if you want to manage your position, you need to have a lot of information about the stocks and its movement style. Is the stock, where are the main supports and resistance of the stock, what is the trend of the stock, what is the personality of the stock, how does the stock prefer to move. Okay, so here, in order for us to determine a target, we wanted to be on the lookout for a potential resistance zone, a strong resistance zone above our entry level. Right now, because obviously the trend in the stock here was quite weak, we wanted to make sure that our target was not overly ambitious, and the metal stocks were also not very positive that time. So as a result of that, we created the position, we set our initial stop loss, we followed the stock, we set our target at the base of the resistance zone, because at resistance zone, what happens is the price touches the resistance, and if it's a strong resistance, the price can recede, it can fall. So we kind of want to we want our targets achieved, and we want a position of profits booked. If we have reasons to believe that the stock may continue in a downtrend as soon as it reaches the resistance. So remember, when you're setting stop loss, the stop loss should be below the resistance. When you're setting the target should also be below your resistance. So stop loss below support and target below resistance. Okay, so here we can see that this entire green zone is basically a support or resistance zone. Why? Because there are these levels. The time when the price was above this zone, we saw this base, basically this 689 690 kind of level, act as a potential support from which price constantly kept moving. When the price came back down, there was again some sort of resistance. Now, support and resistance is never a line. It's not one single price point at which the price will change its behavior or its momentum, and that gave us a profit of 13.28% in a matter of 32 days. Okay, so in order to enter the stock, we did some analysis. We noticed, we collected what I call a cluster of evidences supporting the position. So firstly, we decided that we are long only traders. We need to look for a potential long side trade which meets the criteria of having minimum risk to reward of 3. Once we found that stock idea, we created a position. Before creating the position, we determined what a stop loss and what a target would be. Once that was done, the position was created, the order was placed, the stock was bought. Finally, we waited for the price to move. When the price moved in our direction significantly, we went in and updated our stop loss level. After updating the stop loss level, we waited, the stock achieved the target, and we exited with a profit. Okay, now let's move on to the next stock idea and take a look at the similar setup. So this was DMart. So you can see DMart stayed active for a matter of 24 days, and a matter of 24 days, because of the strong momentum, the stock idea had to be managed how many times? So it was posted on 26th of May, and then one update was given on 31st. So 26th May posting, May 31st, one stop loss update, June 2, one stop loss update, June 6, one stop loss update, June 9, June 12, June 13, 15, June 16, 19, 15, 16, and finally 19. So there are 11 to 12 instances of updating the stop loss in this one. So it was a very intense position to manage. Actually, if you see, even in Nelco, the position was managed multiple times. So stop loss was constantly updated to trail the price so that we did not lose a lot of unrealized profits there. Okay, so let's move on to the chart of Nelco and check out what our execution looked like. Okay, in the comments I can see Mr. Gautam Thakur is asking for some fresh entry stocks. Okay, so Gautam, as a SEBI registered RA, I don't give free uh, there are paid subscriptions in that. So if you are interested, I am dropping the Telegram channel's link in the chat. Feel free to click on the link, join the group, see my way of working, and if you feel comfortable with what I'm sharing, if you're able to understand what I'm doing, my analysis style, and if you want to go forward with it, then only you go ahead and take a subscription for the trade plans. So I have pasted the link for you in the chat. You can use that to connect my Telegram channel. That's just step one. Okay, all right. Now let's move on with DMart. So May 26th, we initiated the position in DMart. Okay, so the initial part where I think I left the thumbnail on, I'm really sorry for that. You did not miss much because I was not sharing my screen. It was just my face. So you do not miss anything there. Don't worry. If you're able to hear it and follow what I said, that was enough. Okay. All right. So let's move on. So like we said, we are looking at DMart on May 26th. Again, we find our white pin, okay, and we see a yellow pin after that indicating where the stock idea was closed. Another thing, if you are smart, you will notice on the screen is that in DMart there are 2 white pins and 2 yellow pins indicating one entry exit, one entry exit. So what you see here is DMart actually has been subjected to momentum trading by me twice for all the members. So we initiated first position on 27th of March. So this is momentum trading, okay? Basically, you buy a stock, you hold it, you wait for it to give a nice run up, you book your profit near the top, you wait for the stock to come back down, buy it again, sell it again at the top. So basically, even though in a matter of 84 days, DMart has given at max 22% of upside, how much profit have we managed to book? We've managed to book around 9% in a matter of, I think I saw something wrong. So 84 days, 22% up move is what DMart gave. We took 9% in 46 days and another 15% in a matter of just 24 days. So less than 84 days commitment and more profit than what the price swing has already, come ahead in the stock. And in fact, if you actually look at the movement, it's only 13% end to end, but we have booked profits of 9% here and 15% here, so that's 24%. Phenomenal. Okay, so we will discuss this setup, or I can actually discuss both these setups, okay, with you. All right, so I hope everybody is able to hear, see everything clearly now. All right, so let's discuss this now. As you can see in the chart of DMart, yeah, there was also this one position where we entered and then stop loss triggered, so that also happens obviously. Okay, so what happened in DMart here was there was some indications on the chart like positive divergences, range shifts, eclipsing on, positive eclipsing, basically daily time frame, 75-minute, weekly, 15-minute, all saying that reversal is coming. The stock started taking good support at a potential support zone. There was strong trend line support. So there were these multiple factors which acted as a positive little over 2% and a target set at the next next trend line level, and at the basically conjunction of the level of the trend line and the resistance zone, which is basically here. So the target was somewhere around 366. So that was a 9 to 10% target. So a lot of times you also have to remember that stocks don't essentially achieve the target. If they give a big whiplash move, before the target has been achieved, there is no harm in absolutely exiting the stock and taking whatever unrealized profit we can capture. Okay, so here the stock, as you can see, right after giving the suggestion, the stock moved very sharply. Okay, the stock came back down where more was added to the position. So a message was shot to the members that it is very good idea to start adding more to your active position. And here, then when the stock moved up again and achieved the target, the exit was made. Okay, now how do you go about setting the stop loss, especially in a stock which has been in a downtrend? All the moving averages are moving down, and during your active position phase, there is a point when all the moving averages come into a confluence. So if you can see this zone, you can see there's a confluence of all the moving averages. So all the moving averages were initially fanning out, and after fanning out they just came together into a cluster, and then they started moving back up. So your style of setting the stop loss changes significantly depending on whether you are already in uptrend or whether you're dealing with a reversal. Okay, because when you're dealing with a reversal like the one that we're seeing here, the reversal being stock, so where you entered the position, before that the stock was in a extended downtrend. So if you're entering here, you're basically entering into a reversal. Here you have to be very careful about managing the position, because it is when the stock is coming out of a reversal, it has a very good tendency, or very once the stock had moved up, we did not trail the price very closely, because if we had, our position would have been exited much sooner than we. You are basically 98% sure. Why 98% sure? Basically, the bracket order that you're setting to safeguard your position, it is not 100% guarantee that it is going to get executed. So there is a chance that the position is not going to get exited, even if the price starts to fall and you had a bracket order in place to protect yourself. But leaving that aside, set your stop loss at even level, that is here. You wait for the price to make a second high. It can take few days, it can also take a few weeks, but only after the price has won. Just wait for the price to go above its previous high. So for instance, the price went above the previous high here. Okay, this was a potential high. So we will adjust our stop loss. So how do we adjust a stop loss? Your stop loss will be now right below the previous low. The previous low is here. So your stop loss would now move up to here. So from break even, you have now come to a position where you can guarantee, or almost guarantee, that come worse, you will be able to lock in 2% profit at this position. Okay, so now when the stock, you can see that the stock came back down to the support level, but it did not breach the support. It respected the support. This support level also coincided with the clustering of the moving averages, and it started to move up. Now when the price started to move up and it moved back up above this consolidation zone or this high, now you can bring your stop loss back up to match this, the base of this support level, which would be 3451. Okay, now every time the stock moves higher up, so it broke out here, so you move your stop loss here. It breached again, so you move your stop loss. Now you have to also be careful that you shouldn't be very aggressive. What do I mean by being very not being very aggressive? Okay. So what you, I'm not sure if I am even connected anymore. Okay, all right. So what do I mean by not being very aggressive? So you see this blue line is the 20-day moving average. Okay, the idea should be that you respect this blue line and don't move your stop loss at any point of time so above the blue line, above the 20 EMA, because then you're basically telling your stock that I'm not giving you any breathing space whatsoever. Like for instance, if you want to upgrade your stop loss when the price is at this candle, okay, let's make things a little bit more visible for you. So suppose you want to update your stop loss when the price is at this long candle, okay, here, this long candle. At no point of time will you update your stop loss above this level, because this is where the 20-day moving average lies. This right here is the 20-day moving average. So you are not supposed to move your stop loss above that. You're very pro letting my positions get exited on the basis of trailing stop losses, because sometimes there may be extended rallies in stocks which gives us a position, which gives us an opportunity for extending our target. And trust me, it feels really bad when a target level is achieved and the stock keeps moving up. Stop loss up and letting that get triggered when the position moves, when the price goes down. So uh, talking about this, continuing our discussion on the second entry that we took in DMart. So again, you saw that here the price approached the support level, took support, started to go up, and when it left the base, that this was the base, when it left it, we initiated a fresh position. Okay, after initiating the position, we set a stop loss and we started trailing the stop loss as the price kept moving up. So price kept moving up, we kept changing our stop loss level until we changed the stop loss level a little bit too tight on purpose, because we could see the high was created here, a doji was formed, another, again the stock started going up, so we changed the stop loss to the base of this doji. Now you will say that, Kavita, that is like really above the 20 EMA, so why did you do that? The reason was that I was more interested in capturing this extra 3-4% profit. So again, like I said, the pace of momentum matters a lot. So in the so after the stock has just reversed and the moving averages are still coiled up and they are still in a cluster, you, when it starts moving up, you need to make sure you're not going too close to the 20-day moving average. But when the momentum has become so strong that the gap between the 20-day moving average and the price itself is more than 2%, that is when we start keeping our moving averages closer, our trailing stop losses closer and closer to the price. Now again, there is a question of which time frame to follow, which moving average on which time frame to follow. For that, that depends on your horizon, how long you want to hold your positions. Now after a lot of trial and error, I have come to the conclusion that I want to follow the 75-minute time frame as the basis of all my decisions, and I use other time frames like 15-minute, daily, 3-minute and weekly to make sure that my analysis is concurrent with what is actually unfolding on different levels in the stock or the index. Okay, so in this case, when I saw this couple of dojis here, it gave me an indication that the price might not be, the momentum might not be as strong as I want it to be, and that is why I made the base of this doji as my next stop loss. And sure enough, this led to a reversal. The price came down and the price soon after the exit went on to declines around 7%. Now 7% decline is very significant in momentum trading. In long-term investing it does not matter, but in momentum trading it's very significant. What we are trying to do is we are trying to capture more and more points. So where people in long-term investing are very happy generating 15-16% profit